All right, so class will be starting very soon. And for those online right now, I want you to actually pay attention to every single details I'll be explaining into this class. Now, some few more minutes and you can actually proceed. Now, for this right here is the content of what we'll be actually covering for the total time we'll be actually opening the class. This is every single details of what we'll be covering. And for today's class, we're actually looking at the basics. And under the basics, you can see every single details underneath the basics. This right here are what we have under the basics. And the second chapter, we have the market structure, and the third chapter is the liquidity. But I'm sure for tonight's class, we can actually cover the basics and the market structure in tonight's class. Now, for those who didn't actually make it to the live class, you'll be actually getting the video because this is actually recorded. They'll be getting the video from the channel. So for those writing online, I want you to go to the comment section to actually leave in the comment section. Okay, so you can just go to the comment section and actually type in SMC. That's what we actually know. For those who are active, that's how we know those who are actually active. All right, so I think we're having 3 people online right now. Actually, I don't really want. Okay, don't worry. Let's go. For those online, I'm sure everyone can actually hear what I'm actually saying. I'm sure you can hear what I'm saying clearly, and I want to make sure everything is actually going smoothly without any. I want to make sure everything is going smoothly without any errors. So let's go. For those online right now, let's proceed. Let's proceed. All right, thank you guys, and welcome to the chat. Now let's proceed. For the first chapter, you can see the basics right here. Right, this consists of the basics. Now let's proceed to what it consists of. Now, like I said in the group, you actually need to get yourself a notebook, and also make sure you've downloaded Go Chatting and also TradingView. So let's proceed. Now you can see details like this. We need to look at is expansion and retracement. You can see this right here, expansion and retracement. So in your notebook, you can just type this short definition for expansion. Right, it occurs when there's an impulse movement towards a direction. That's what we call expansion. And for the retracement, is the correction movement after an impulse movement. Now, the retracement is what corrects this expansion right here. And we'll be looking at this right here in the chart. I'll be showing you an example of what it looks like in the chart. So you can just type this down in your note. You can type this in your notebook. Like I said, we'll be needing a notebook. That's very important. Now, for those who are just joining, you're welcome. Class is just starting and you still haven't missed out much. We are still right here in the basics, the very first details we actually need to look at. Now, still right here, it says expansion and retracement. That's the very first step you need to look at under the basics. Now, if I swipe to the next page, this is what it looks like. This right here is an uptrend. I want you guys to make sure you're taking notes of everything I'm actually going to be showing. And you can also still come back to this video. It will be in the channel. You can come back to actually take notes of everything we're actually teaching right here. So this right here is an uptrend. Once the market is going this direction, like this, it's called an uptrend. And once it's coming this direction like this, once you're seeing a chart like this, the market going like this, it's called a downtrend. Now, for those who are just joining, I want you to always leave a comment in the comment section to show that you're just joining, and make sure, let me know if you guys are actually hearing me. Leave a comment in the comment section for those who are just joining. Now, this right here is what we call an uptrend. You can draw this, use your pen to draw this in your notebook. It's called an uptrend, and this right here is called a downtrend. Now you can see what this E, they wrote an E right here. This is expansion, and retrace. This small movement right here is called retracement. Now if you go back to the top, you see expansion. Expansion occurs when there is an impulse movement towards a direction, while retracement is the correction movement after the impulse movement. Now you can see this expansion right here, and this small movement right here is to correct this expansion right here before it continues to the top, correct it back, expand to the top. While that's for the uptrend. Now for the downtrend right here, see there's an expansion towards this downside, and there's a little bit of retracement, and also the expansion, a little bit of retracement and down. That's for the downtrend. You see most of this in our trading chart. Now, if I go to the next page, now we're in the live chart right here, right? We're in a chart, it's not live. We'll still actually be using our live chart. We should actually be using our trading view and be using the Go Charting to do a back test. So right here, you can see this right here, this move right here, this move to the top is an expansion. why this small movement right here is an retracement. Now I can't really consider this as an expansion. Okay, this right here is a retracement. Why this also is an expansion. This from here is an expansion. This small move right here is a retracement. This move right here is considered an expansion. This right here, little bit of retracement, and this another expansion. This right here, retracement. This another expansion. It broke this one. This right here, another expansion, and a little bit of retracement, and it came down here, another expansion. Now I'm sure you can see this right here, another expansion. All this from this point to this place, it's a downtrend. You see the market is coming down, it's a downtrend. Now from here, this big expansion right here, this big one, you can see this another expansion. The market is actually going up toward the up direction. This big expansion and this small move right here is the retracement. Another big expansion right here, it is small retracement, the big expansion and the small retracement. That's how expansion and retracement works. Now if you scroll up again to the next, the Fibonacci retracement right here. This another section under the basics right here. So you can see the Fibonacci retracement is used to determine the end of the retracement movement. Now see this movement right here, like this expansion. For you to know where this retracement will get to before you can actually place your order, you actually need the Fibonacci to get to figure that out. As Fibonacci tree is one of the setup you can actually use to figure out where the retracement. Like after this expansion right here, people actually want to wait for a retracement before they start placing a buy. We are in a new uptrend, we're in a new trend right here, which is the uptrend. So people want to actually wait for a retracement before they actually place a buy to the up direction since we're in an uptrend. So for you to know where to actually enter your order, you're actually going to be needing Fibonacci. Now see, Fibonacci retracement is used to determine the end of the retracement movement. Usually the price retracts at 50% or until OTE, which is 0.62. There's an OTE of 0.705, and there's an OTE of 0.79 before another impulse movement. Now right here, if you have actually placed our Fibonacci right here, don't worry, you can just go straight to doing the practical with our trading view and go charting app. So right here, see, you can just type this down into your notes, and for the next part, let's see how the Fibonacci works. Now see, in this movement right here, you can see there's an expansion right here from this point at the top, to this point right here is an expansion. I think so. All right, so welcome back. Now, from this point right here, okay, a minute, guys. All right, guys. Like, let's continue. Now, from this point right here to this point is an expansion. I'm sure you guys can see this from this point right here to this point. So now I won't be taking your time. We'll be ending this class immediately once we've used an hour. We've used an hour, just 1 hour of the class. Now, from this point right here to this point is an expansion. Now you can see this move right here is a retracement. This move to this place is the retracement, and the continuation right here. So for you to be able to know where you'll be able to enter your trade, something like this. Like you can see, this point is where the market got to before creating another expansion. Go to our trading view, and also you can also use go charting, but there's a reason why I actually want to use go charting. We play it once again. Now, go charting is what we'll be using to backtest and stuff like that. So from here, let's actually go to our trading view. All right, guys. So this right here, you can see right here, this is XAUSD, and this right here is the time frame. Now, this is the current position, the current price of gold right now. This right here. So you can see this. See what you would. I don't know if you guys can also be okay right here. Now, see what you would. It's called fib retracement. It's what you actually click on. Now, let's go back to previous rise. Now, let's start from here. Let's use the Fibonacci retracement tool from this point. Now, take a look at it. This is how it is being used. Now, that's it. Okay, now see the way I drew the Fibonacci. This is what we call Fibonacci tool. This right here. So you can see how I drew it from this point. This expansion. This from this point right here to the top is an expansion. This right here is an expansion. Now you can see where to this section, into this white green section. Now, if you're going to be placing a trade, you'll be placing your trade since we have an uptrend. We all know gold have been in an uptrend for some months now. Now, since we have an uptrend in gold, you can see right here, just place it from this low to this high. Put the Fibonacci retracement tool from this right here, from this low right here to this high, and you wait for price to get into this section right here. Now, if you're going to put your stop loss, you can just put it below this line right here, a little bit below this line. That's where the stop loss would be, and then you wait for price to break for your first TP. You wait for price to break this high at the top right here. This high at the top right here. So once price break this high, that will be your first TP. Now let's also use the Fibonacci tool in some other aspects. Right here. Okay. So let's start from this right here, this place to this section. This place is another high. All right. So you can see that from this place, right, from this low right here, the price got to this place, to this green section, into this box. And if you take a look at the numbers, there's a 0.7 based on the definition right here.